Hello and welcome to Super Insider, a podcast about all things superannuation and retirement so you can put your feet up and live your best life. My name is Anne Fuchs. I am Executive General Manager of Advice, Guidance and Education at Australian Retirement Trust. Now today we are talking asset allocation, and I know that sounds kind of a bit technical, but we're going to make it really interesting and so that you understand what it means for your retirement savings so you can put your feet up. But before I do that, I just need to remind you that, of course, this is general advice only. Please don't act on anything that we're talking about today unless you get some financial advice, call your advisor, call us, or if you're a member of another super fund, call them. Okay. Now, I have somebody who actually is, I'm going to say an actuary with a personality. He's a pretty cool dude. He sometimes wears like cons with his suit. Sometimes. He's a pretty cool dude. Our head of investment strategy, Andrew Fisher, Coffs Harbour boy, who has worked at Australian Retirement Trust for, 8 years now?
Yeah, 8-9 years, but maybe 14 if you add it all up.
You had the sabbatical in New Zealand. Indeed. So asset allocation, let's talk about what you do. So asset allocation means you decide what asset classes you invest the money in, yes?
Correct, yes. And I'm glad you didn't open with asset allocation. Sounds boring. It's not boring. It's incredibly exciting what we do every day. So asset allocation, we have diversified options. We offer to all of our members. There's single asset class options, so members can invest in shares or bonds, but most of our members entrust my team to create options for them. We call them diversified options. We blend together different asset classes. That's why it's called asset allocation. We blend together the equities, we blend together bonds, we blend together unlisted assets to build a diversified portfolio that will deliver.
So it almost sounds a bit like cooking. You've got you're blending all of these ingredients together to present the perfect returns. So when you're looking at your kind of blending of all of these different asset classes, riddle me this. We've got 2.3 million members. Mm-hmm. And a big chunk of them are getting superannuation guarantee put in. Mm-hmm. And so that means there's a lot of cash flow that's coming in that has to be invested. What does the cookbook say for that?
Yeah, it's a really good question, particularly when you think about how much unlisted assets we have in the portfolio as well, because you can't just buy a little bit of an airport every day when member cash flows come in. And so we have an exposure management team. Their job is to take those cash flows and make sure every single day each of our diversified options is rebalanced and looks exactly like what it is we want to actually be invested in. So they use, we have a capital markets team as well. They are trading in the market every day, if necessary, buying derivative positions if necessary, so that we can make sure every single day when a member cash flow comes in, they get exactly what we said when you pick up the PDS or the investment guide.
Tin?
What's on the tin is what you get every day.
So what you're saying is, in short, they're making sure that the cash rate isn't dragging down the performance of what they're supposed to be invested in.
That's right. Having strong cash flows is a really good advantage for us. It allows us to do lots of things, but if we don't manage those cash flows well, it could be a disadvantage and it could drag on returns. So yeah, that team's primary function, or one of their primary functions, is making sure that doesn't happen.
How many people are in your team, Andrew?
How many people are in my team? Around 24, 25 at the moment. So it is a big team of people. Exposure management's a big piece of it.
So if you were describing superannuation and I got you to finish the sentence, mm-hmm. Asset allocation is important in super because...
Asset allocation is important in super because over the long term, it is the number one driver of what your outcome will be. So where you put your assets over the long term, so long term we call it strategic asset allocation, it's the number one factor. It accounts for 80% of your investment outcomes. And so a lot of the conversation at times is this stock went up, this stock went down. But for members over the very long term, us delivering real returns that are going to set you up for a comfortable retirement, that comes from getting asset allocation right.
But people do love the investment story.
Yeah.
So just to sort of add a bit of spice to our asset allocation, let's give our listeners and viewers a story around an investment that kind of has made members some money.
Yeah.
What are you thinking? Like airports?
Airports,
I love the Heathrow one, but no. Yeah, I love that because we have a London office now. That's very cool.
Indeed.
Yeah.
Like it's a great story, Heathrow Airport. So one of the biggest investments in the portfolio was Heathrow Airport.
We haven't sold that one though.
No, absolutely not. We have a that investment allows us to have an office in the UK to manage it. It's that big an investment for us. So we actually have a dedicated team on the ground looking at investments in the UK, but managing that investment directly. We are in a range of airports, Brisbane Airport, Sydney Airport. We don't own all of these assets. We own them in sort of partnership with other investors, but sizable positions in those assets. And the thing we like about them is if you're flying into Brisbane, there's no alternative, right? You must land at Brisbane Airport. And so that, I guess, strategic positioning of the asset means the cash flows become very stable and steady. So really reliable, long-term return generating assets. Airports are fantastic. Another great story, and we talk about diversification a lot. Another great story that sort of demonstrates that a little bit, I think, is we went into a partnership with some other investors to purchase 50% of the mobile phone tower network from Telstra. That was sort of just around the COVID period. We went into that investment. If you remember, after COVID, that was one of the more challenging investment periods that we had. The war in Ukraine commenced. Inflation got very high. It's very hard to
supply chain just completely collapsed around the world.
And interest rates went up very quickly, and that just hurt investments everywhere. That was one of the investments in our portfolio that did quite well through that period. You have inflation-linked cash flows generally on something like that. So the investment's structured to do well in that environment. But because the cash flows were so stable, it actually became really attractive, and we actually saw discount rates compress, which basically means price goes up. People are prepared to pay more for a stable asset generating those cash flows in that environment. That's why we diversify, so that when everything else is doing badly, we've got something else that's doing well.
Okay, and so that, I guess, that is actually the definition of diversification. It's making sure that...
Yeah, that's right, exactly. Making sure that when something's going down, we've got something in the portfolio going up. And so where I think that's really important for members is, what's really important for members is the ability to take growth asset exposure over the long term to generate the returns they need. Where diversification helps is that's the sleep at night factor. Some growth assets are doing well, some might not be. As long as we can put together a portfolio with a bit of stability, so over the long term members can sleep well at night, but also be exposed to growth assets over the long term. That's what we're trying to do.
We've just released some pretty good numbers. Number one for growth, according to Super Ratings, over 10 years. Tell me everything.
Look, I think the first thing to think about there is it's something that we take really seriously, because the best way to tell if we're doing a good job, I think, is to compare us with a range of other superannuation funds that look a lot like us, share some of our competitive advantages, some of our size and scale. That's one of the best benchmarks for us to see, are we doing a good job? And so the way we've delivered that outperformance, it hasn't been one amazing year or one amazing month. 8 of the last 9 financial years, we've outperformed the median super fund. And when you compound that outperformance, and we talk about compounding of returns, you compound outperformance year on year on year. That's how we get to be
beautiful set of numbers.
With our high growth options, number one in the high growth survey.
Okay, and so we have just launched a new investment menu, and I'm sure many of our listeners would be keen to understand, what does this mean for them?
Yep.
Andrew, you worked so hard, weekends, pulling that all together. What would you say to particularly also our Q Super members who are really interested, I think, as well?
I'll start by saying a huge team of people.
Yes, I know, but I'm looking at you. I know a huge team. Sorry, I just.
So it's a really exciting opportunity. I mean, if you think about the merger itself, like so much good, and we become so large off the back of it. And this is, I think, the first real tangible demonstration of what we can do as a merged fund. And so if you're a Q Super member, for example, you've seen a substantial expansion in the range of options that we have available. You've gone to now, I think, 15 different choice investment options for a much smaller pool historically. We've been able to create a new high growth index option specifically for people that like that. And the other major development, which I think is really important across that choice menu, is an option called the balanced risk adjusted option. That's tailor-made and specifically designed for members who are in the post-retirement phase. And I sort of touch on this at times, but if you think about the importance of sort of managing volatility, particularly when your balance is high and you're taking down from your superannuation, that's an option that is specifically designed to deliver long-term returns but manage that volatility.
And a lot of the Q Super members would know the term smooth ride.
Correct, exactly right. Yeah, so that's the classic smooth ride. So it's a fantastic technology, fantastic sort of asset allocation innovation that Q Super members had access to that now all of ART members have access to.
Yeah,
so really exciting.
Yeah, good. So you have, if I think about the sentence you finished, that it is the asset allocation is the key kind of driver for determining whether you're retiring and maximising these assets that have been invested every month, every quarter. It's a hell of a lot of responsibility, if no pressure. So how do you and the team know that you're making the best possible decisions for members when you're making these decisions?
Look, I think like a lot of that comes back to having the right team of people that have that sort of alignment and purpose to our members. So we have a team of people that really care about what they do. Culture is super important, right? Like because it is at times it can be very challenging. You're making a forward-looking decision with imperfect information, balance of probabilities. What do you think is going to happen? And then real life doesn't come about in probabilities. There's only one actual outcome that happens. And so diversification allows you to balance the probabilities of what might happen. But really what you rely on is having a group of people who are solely committed to doing the best they can for our members, and knowing that those people will do that gives you comfort that if something goes wrong, it gets fixed quickly. Everyone's there for the right reason.
Okay, and then for our older members, when it comes to asset allocation, what is the one thing that you and your team are doing to make sure that they don't have any nasty surprises?
Yeah, look, so it becomes much more important. So we talk about volatility, right? Volatility is basically the up and down of the portfolio. Volatility becomes much more important, particularly for older members. You have a higher balance, but also you're starting to take money out to fund your retirement. And so what can happen then is we talk about crystallizing losses. You're in a position where you must take money out, or you are taking money out. That increases the likelihood that you will crystallize some losses. And so what we try and do is manage volatility as best we can in that environment. One of the ways we can do that is called de-risking. So you take a slightly less growth asset profile to try and match your return profile with your risk appetite and the plans that you're making. So one thing you can do is have a lower risk option. Our My Super strategy incorporates a glide path, so it will de-risk members as they approach retirement. The other thing members can always do, which is super important, which I know you're thinking right now, is get some advice, because as you approach retirement and your balance is bigger, having good quality financial advice is super important.
Yes, and I think for those that don't know what My Super is, it means that we look after the team, make the decisions on your behalf.
Yes.
It's a legislative requirement, but it is where we are looking after the money on.
Yeah, and 80% of our members are in the My Super option. So it's a really big, important responsibility to make sure we get that one right.
So do you have a favourite child in terms of asset class? I'm just thinking about, there's a lot of people talking about the 1 year returns at the moment and why the 1 year returns the way they are in asset classes. Do you want to explain why that is at the moment in terms of the 1 year performance?
So look, the main driver of 1 year performance absolutely is listed equity shares. Like they've gone up fantastically over the last 12 months, and that has underpinned all returns really. I think listed equities or shares was the only asset class in the portfolio that actually did better than any of our diversified options. That tells you that all of the outperformance essentially came from shares. We're talking 15 to 20% returns. So if our growth option, for example, delivered bit over 11% return last year, and equities did sort of 16, 17%, every other asset class was below 11. That doesn't mean they did badly, but shares were absolutely the standout last year. Now, in terms of favourite child and favourite asset class, I'm always hesitant to answer the question.
No, you don't have to. You can tell me to go away.
Of course I'm going to answer it.
Okay, right.
I'm often accused of being contrarian, right? I like the things that everyone else doesn't like, and it's a characteristic that you often find in people that have my job, because we have to look for the opportunities over the long term, and generally that's the things that people don't like right now. And so if anything, the favourite and most interesting asset class for me right now would certainly be property or real estate. That's where you're seeing the most, I think, most opportunity for good long-term outcomes right now. It doesn't mean it's easy. It's certainly not going to be easy to pick the right investments in that space, but where you see distress and challenge, that's where you also see opportunity.
Do you have a favourite child within the property portfolio? I know Michael Weaver, who's in the team, who manages an asset, has the G'day Discovery Park.
So I'm not allowed to say that one then.
No, it can be your favourite child too.
I mean, I it's a fantastic investment, right? And if you think about it from a member sort of perspective as well, it's such a relatable investment as well. Everyone understands how caravan parks work. You can understand the thematic. It's really good quality land. I mean, and the beauty of that investment is you talk about diversification. I think back over the last 5 years, it has been some of the most sort of strange diversification qualities come out of that.
What do you mean by that?
Remember the bushfires, which took out a whole season?
Of course.
And so that was really bad for the investment. Then you had COVID when you couldn't leave your state. It's amazing how many caravan parks are on the borders of states, right? So those are doing really well because people want to get as far away from their home as they possibly can, but no one will let them go across the border. So you got like those sort of aspects of it. Like it's just a really interesting investment.
Am I allowed to say I don't like caravan?
You are. But I love them, right? So before I was working in this, one of the last things I was doing travel around Australia with my now wife, and we spent a whole year in caravan parks.
Good on you. That's good. All right. Well, look, I think asset allocation, I think we've covered all. What's probably your one, I guess, final message to our listeners and viewers around why they should take an interest in this, the asset allocation, the assets that they're invested in? Why should they be interested?
First and foremost, super is your money. So be interested in it. If it was a bank account, you would be so interested in it.
Are you hearing me bang on about that?
No, but it is so important. I see it with my own children now. It's like they seem to not care. And I'm like, if that was your bank account, you would care a lot. So care, be engaged, think about it, because the decisions you're making now are going to make so much difference when you get to, say, my age. And then you're going to realize, why wasn't I thinking about this when I was younger? So be engaged, care about it. But most importantly, think about where you want to be and make sure you are taking the right amount of investment risk for your needs.
And I would say too that you need to make sure you're with a fund that's got all of those things that Andrew's, but you've spoken about as well, about culture, capability, talent, a track record. Superannuation is, lots of people I think look at the 1 year and then go, oh, I'll chase that. That's really not the right thing to be doing. It is a long-term game. So make sure that you've really got confidence that you're with the fund that has that long-term track record.
Yeah, absolutely. And I'm really proud to work for a Profit for Member fund, right? Like it's a fantastic thing that we do. And it attracts people like me that really want to do the right thing for our members. So it's a fantastic place to work. I love working here.
Yeah, good. Okay, well, thank you to our listeners and viewers. We hope you've enjoyed this. It's certainly been great to have Andrew on the podcast. Make sure you give us a rating, top rating, wherever you download your podcasts, and we'll catch you again soon.